So let us, because there are more than 30 of you, so let us wait for 3-4 minutes more and let us start at 1:10 dot. Okay. We will talk in between, but we will wait for starting the presentation for 3-4 more minutes. So this is the beginning of the new financial year. You have seen that only one day. Just a second. Am I audible again? Just a second. I have plugged in a new input device, and that's why I am asking. Am I audible to all of you? Yes. Thank you. So, new financial year has started. So, this is a new beginning. And I think from here on, you will also have a very great and successful trading year. And as you know, that the COVID has been increasing in a very fast pace. Like on Monday or Tuesday, the number was, I think, maximum 56,000. And from that, it has gone to 90,000 in a 3-day span. Maybe due to the Holi factor, because a lot of social mingling happened due to Holi. And that's why, due to the physical contact, the cases have actually accelerated in a very fast pace. Also, elections are happening in a couple of 4-5 states, so that is also playing a part. But obviously, Maharashtra, with almost more than 50% of the cases, is a right now pressure point in that COVID scenario. So stay safe. This may be possibly again a beginning of a period when people will mostly stay at home, and what will happen is that what happened last year, a lot of money printing would go on across the world. If this also takes place in the US, in the Europe, so Europe is already increasing. US is right now having a lull, but if once again, if it can be seen that the US cases are increasing, you may see a lot of money printing, and from that you can see the kind of rally that we have seen last year into the market can actually get repeated. Okay, so great. Let us start our session right now. Please stay safe and please participate into the market in this great rally. You might find that I have shared a link of a session that is on a Friday. Me and Vivek sir every week take this session. This is on the what is happening in the market, what sector are actually in movement, what sectors are having momentum. So please participate in that. You may not understand each and every word of it, because we will discuss everything, because this is a holistic discussion and you are only into the second class. So things you don't understand, you can for now note down and wait for your classes to be over. At that point, you will have a fair idea of what is happening into the market. Okay, fine. So let me start with this. So to give you a synopsis of what we studied in the last class was mostly about trend line. Okay, trend line, the horizontal support and resistance, the channels, the slope angle. So how they decide the way the market moves. And we learned a little bit about candlestick and line chart and obviously bar chart. From that, we understood that market mainly had three kind of scenarios. Like one is downtrend, then there is the range bound movement, and then uptrend. Okay. Generally, downtrends are very vicious; they fall very fast. Generally, uptrends are long lasting and they remain a little bit slow paced, except a few situations like what happened with JSW Steel recently. Generally, the downtrends are very fast paced. You can see from this fall happen within maybe 10-12 days, but to move up this part, it took around 3-4 months. So generally, this is the characteristic of downtrend. They happen generally very fast. That within a month, if I talk about this downtrend, see within 2 months this downtrend happened. But to talk about this much uptrend from here to this level, it took more than 3 months. Okay, 4 months I would say. It would 3 months, October, November, December, April. So it had taken 5-6 months. So generally in market downtrends are relatively fast. Okay, now today we will learn about classical chart pattern. Now the next class we will learn about the candlestick chart patterns. Now there is a difference between classical chart patterns and candlestick chart pattern. And please remember this when we discuss this too. See, classical chart patterns are generally formed by price being range bound in a small area. You can see in a small area, price is basically range bound here. Price is basically range bound here in a small area. So when we find a specific geometrical pattern in this small area, it is called we try to actually summarize it or try to look at it in the form of a geometrical pattern. So from that triangle, rectangle, cup and handle, all these things have come. In a classical chart pattern, you will generally see a bunch of candles, and when there is a breakout or a breakdown, so breakout is on the upside, breakdown is on the downside, you will see that in classical chart patterns, generally we can define a target, okay, and a stop loss for trade, okay. Though I will discuss the classical way it is discussed in the market that this should be the stop loss, and the way I in practice look at it, because practical trading has evolved and it is different from classical chart trading or classical way of using this pattern. So in all classical chart patterns, you will find that a target and stop loss can be done. And remember, in the candlestick patterns, you will know the turning point, okay, that a reversal is happening mostly or continuation is happening. But in the candlestick pattern, you won't be able to fix a target for the after breakout or breakdown. So this is the main difference between classical chart patterns and candlestick pattern. This we will learn. So as we have learned that market has basically three phases. After a downtrend, not just after a downtrend, an uptrend, and a consolidation. Now there are different names, like people may call it consolidation, because this is a range bound activity. I just mentioned this as a range bound. See, after this range bound activity, price could have easily fallen down, broken down, okay, then it would have been consolidation. Now as price turned up, it is right now it can be classified as a accumulation. Now you understand, these are the aspects of market that we get from the Dow theory. Just a quick check that how many of you have actually gone through the Dow theory from the recorded module. One, I can see Ankit. 3, 4. Only 4 of you? 5, 6, 7, 8. So last day it was also 8 of you. So last day there were okay. So 3, 4 extra I can see. So again there are 7, 8 persons remaining who have not gone through the recorded module. So I will repeat that in the ETA in your kitty you will find recorded module of technical analysis. Those who have not gone through, please go through that. That is important. Okay, there is nothing for me to take a live class on it, but please go through. It is very important. Okay, now what I am telling now you may not be able to understand this terminologies. Okay, so who have not gone through. Now after the price have moved up, we know that this was a consolidation, this was an accumulation. Okay, but in real life, trust me, when you will be trading and when this part of the move is not in front of you, you would be looking at to price like that. It can break down or go up. So it hardly matters to you, or rather you cannot predict that if it is a consolidation or accumulation or somewhere it is a distribution. Like after this fall, price have gone up also. So always please remember, classify market for practicality with only 3 terms: down move, up move and range bound. Now if it breaks down after a down move, it becomes a consolidation. If it turned up, it has become a accumulation. So it doesn't matter in practical life that because you don't know beforehand which way it will break up. For you in the live market, it is the range, and the moment this range or this channel will break out in either direction, you will trade. So for someone classifying the market from academic purpose, he may say that this was an accumulation, this was a distribution. For you as a trader, it hardly makes any difference knowing after the movement. For you, it is a range and you want to trade this range. Now, as I told you that for any range bound period, you will generally see. And let me tell you, many of you have been asking to me that, sir, what is the implication of volume? See, please understand, volume is generally higher in the rise. See, here this great fall happened without much of a volume. Slightly increase in volume, but not much. Why this happens is that, see, if the stock is going up, I, you, and everybody can trade in it. Understand this. If a stock is going up, I, you, and everybody can trade in it. So volume generally will be high. Okay. Now, if the stock is falling like this, generally in India market, people don't trade on the sell side, at least retail people. So what happens if you don't have a stock until and unless you have the capacity to trade into derivatives? You won't be selling the stock, okay, because you have to cover up before the market is closed. You cannot sell the stock and pick it up after 3-4 days. So generally in the sell side the volume is low, and generally on the buy side volume is high. This is one thing. So people may say if there is a breakdown with volume, it rarely happens. On the downside, volumes are generally low. Now, in earlier time, the volume had very significant importance. Like here you can see that this move happened, this up move happened with a lower volume than average. You see, but in prior world or maybe 15 years back, volume had immense implication. Like if the market was going up like this, you can take it as a rule that if it is going up like this, then the volume would increase and volume would show you the way. So what happens is that if we are talking about a range bound movement, and generally in a range bound scenario, volume drops like it has dropped from past. Now, what do here is that in the volume, I will insert an indicator and look at that. This was a question with someone also. So in the style, what I am a moving average and 20 moving average, I am putting. So this is the 20 moving average. Now see, as the stock has started moving, volume has a little bit increased. So generally in a range bound movement, volume is supposed to go down. Here the volume was high. So volume in general has lost the significance, but generally when there will be a breakout, if there is increased volume, which there was not in this case, if there is increased volume, we will be more confident. And if like here in this up move, we are a little bit confident that this up move had happened with quite a bit volume. So you are understanding what I am trying to say is that if the volume is there during the breakout and breakdown, we get in confidence. But in today's world, volume is an important aspect, but it is not a necessary aspect. You understand what I am trying to say? It is an important aspect. If it is there, we get more confidence, but it is not absolutely necessary that if there is a breakout, that volume, and if volume is not there, we will be skeptical. It is not like that. Time has changed over the years in modern time, because in modern days there is a lot of algo, and almost 50% of the market is driven by algos. So there is a lot of volume created due to algos which act in short term. So presence or absence of volume doesn't make that of a difference. Is it clear? This part? Volume, see, whatever amount is bought, that amount is sold. So Vikesh ji is asking, volume is equal to buy plus sell. No, volume is equal to buy or sell. Whatever is bought, that much is sold. Okay. Buy plus sell. So if you go to the market and buy 1 kilo of potato, someone has sold it. So is it 2 kilos? Is it simply 1 kilo of potato has changed hand? Either buy or sell. It is not buy plus sell. Okay. Thank you. Now we will move into the chart patterns one by one. So we will start with the double bottom pattern first. So just a second. This is the double bottom pattern. Look at this. For a double bottom pattern to be there, please understand first there has to be a down move. Okay. Now after the down move, and this happened in United Spirits in weekly chart. And one more thing, because this is weekly, I remember, if a pattern is appearing in hourly chart or above, it is more reliable compared to something happening in 5 minutes and 15 minutes. So please avoid working with patterns which happen in very lower time frame and concentrate on patterns which are happening on higher time frame, like hourly, weekly, daily, monthly. Those are more important. Okay, 15-minute or 5-minute chart pattern, something may happen, but that doesn't have that much success rate. Now what I am trying to say is that what happens is that bottom was formed and there was a pullback. After a down move, there was a bottom created and there was a pullback. And what we know as downtrend is lower highs and lower lows. But the sequence of lower high and lower low is breached here because the second low that is formed in a W bottom is generally at the same level. It is not exactly same level, you can see. The second high was a little bit higher, it could be a little bit lower also, but mostly same level. Now, what is the I would say the threshold that you would say if you are looking at weekly chart? Obviously 1 to 1.5% difference is almost okay. If you are looking at a daily chart, maybe 0.5% difference is okay. If you are looking at an hourly chart, maybe 0.2, 0.3% difference is okay. So practically the difference between these two should be minuscule compared to the pattern itself. Okay, because exact equal low may not happen all the time. Now what you see what happens. First, a bottom created pullback, bottom created. Now what you do? You do is that you draw a trend line with the at the uh, like a horizontal trend line with the peak of the pullback line. Okay, so what happened is that here it pulled back, and I have drawn here two lines. Why two lines? Because you can see that one thing is that it was a shadow, so I had two lines, one with the body, the maximum body of the pullback, and one with the tail of the pullback. Now what happened is that when the moment there is a breakout, there was a breakout like this, and this has failed. You have to understand. We don't take in practical life any trade with this bigger stop loss. How big is the stop loss? 320 to 475. In practical world, it is said that just if there is a breakout, take a trade with the stop loss below this low. Now, if I have to do that, my stop loss would be 150 points. That is not practical. You have to understand. So the moment it broke out, I had taken a trade. I would take a trade with 2-3% kind of a stop loss, and with 2-3% up move, I will book 50%, and 50% I would hold for going up. So that is the way we trade. So the moment it broke out, our stop loss might have been just 3% below this, because this was weekly chart. Maximum, we don't take more than that stop loss. So what happened? 50% was booked and 50% was hit the stop loss. It is okay. I don't have any problem. Now, if it comes down, my stop loss is hit. It is fine. Now, the factor is that the next time there is a breakout, I again take the trade, and this time you can see from 475, it had first in a week it has gone to 560. That was good for me to book a profit. Okay. Now, the classical target for this is how it is drawn from the this point to this point. The length we measure by drawing a line, and then copy the line and paste it above, so that this is my target in general. This target was achieved, and whenever it had pulled back to this line, this was good entry points. And we can see for many weeks it kept on giving this good trade from 475 to around 550, 560. For many weeks it kept on giving this trade. It pulled back once, and then it had a big move. Let me go to the real chart and show you this move that happened. And I'm going to the weekly chart. Okay, United Spirits was the stock. Okay, so this was the move. So let me again show you that how I would draw this. So this is the line, horizontal line, and this is the another line which is using the body. Now, what is my target? I would draw another line from the low range. Okay, so this is the depth. Okay, so basically my target would be, if I take this as the breakout point line, and if I take the upper line, the target would be a little bit more. Anyways, so I'm taking this one and pasting. So this line, if I project, so my target was somewhere around this, which came little bit later, like 170 points. But even without, so not 170, it is 362%, 115 points, which came later. But in between 60-70 points rally, it kept on giving for quite some time, and then it went up. So you understand how I project a target of the trade when I draw United Spirits like this. Now, for next week also, because we are discussing the stock, let me look at it. Okay, so I already have a alert kept on here. If it goes above this, we will have a buy trade. Okay. I 58, if it goes above 576, we have a buy trade. That is different. But what I was trying to show you is that this one, sorry, this one, which was a little bit back, the weekly chart it was, sorry. And we were talking about this move. So is it clear, the double bottom to all of you?
Hello.
The two blue lines is that, see, when I was drawing the line, either I could have taken the top of the body to draw the line or top of the shadow. So, like any trend line, I can draw a trend line with the top of the body or top of the shadow. It is drawn like that. Okay. So, similarly, if we have learned about the double bottom, let me look at a chart with the double top. It is the Maruti chart. And again, weekly chart, if you can see Maruti. So, similar configuration, if you see, and just a second, let me go back here. If you see, when the actual breakout happened, the volume actually increased. But even if there was not increase in volume, like it happened this breakout, we should have taken the trade. Okay. Now with the Maruti. So if I'm talking about the Maruti chart, if you can see, there is a weekly chart and similar. A move and then a pullback and then another move at a similar level, the top was created. And the moment this was breached, sir, it can be any time frame higher than hourly or higher. You can find a pattern in any time frame, hourly or higher. I told this a little bit back that when we are talking about charts, it can be hourly or above. Below hourly, we won't consider it. Okay. So you can see just a second. So Sukhir Voraji, for the stop loss, I told a little bit while back. Did you enter just now, sir? Sukhir Sukhvir Voraji? Or were you present from the beginning of the class, sir? You were present from the beginning of the class. You were saying yes to that. So I told that in practical, the stop loss should be this big, but we don't have any time a stop loss of more than 2 to 3%. If it is daily chart, we will have 2%, weekly chart maximum 3%. We don't have this big a stop loss. Okay. So now going to the Maruti chart. See, in the Maruti chart, ideally when there is a breakdown, you enter the short at that point of time. And ideally your stop loss should be this big. But would you trade with a 1700 point stop loss in a stock? No. So your stop loss, the moment it breaks down, can be maximum 2-3%. And you, when project this move, this depth of this pattern, the downside, you get similarly double top. And in this case, it was achieved straightforward in a down move. Now, what happens when you take the trade? You take the trade when this line breaks, and you have a stop loss of 2-3%. Now, the moment it goes 2-3 down move, what you do is that you book 50% of your profit, because as in a practical world, you cannot have 1700 point stop loss and 1700 points target. Now, what happens? You take, suppose with the 300 points stop loss, it goes 300 points, and you can do this in derivatives only if you are trading in a weekly chart, because you have to hold the trade for few days and maybe for weeks. So you go, the moment it goes down 3%, you take out 50% of your. So now you hold your stop loss maybe at your selling price. Now, as it keep on going, you keep on trailing stop losses. So suppose from here it jumps back 5-6%, your trailing stop loss is taken. That is fair enough. Can I mark the stop loss? Why not, sir? If I am talking about Maruti chart, and this was the pattern. If I am going at 8260, stop loss is 3%. If suppose 3% is almost 250 points, so 8500 would be the stop loss. I'm marking at 8500. This is my stop loss. Max, because I cannot have 1700-1800 point as my stop loss. You understand? Rikesh ji. So this is my stop loss, and I would ideally want to have a target of this much. So if this is the top, and how do I draw the target? From this top to this line, from here downward, this much is a target, but before target is achieved, you can see there had been a pullback. It had come down to, suppose you were trailing the stop loss, 6809 was the low, or 6800, and from that it went to 600 points up. So your trailing stop loss might have been hit before your target was achieved, but that is fine in practical world, because you cannot have this bigger stop loss. You also always don't play for this bigger move. Even it had fallen this much by 3%, I book 50%. And what is the 50% booking level? That, let me mark that also. 250 points below. So 78,000 basically. So around this much move, I book my 50%. And for 50%, my pick again bring my stop loss here. Now it is falling. Every 3% down move, I am moving my stop loss 3%. At a time, there would be a pullback. Okay, I will be out. But suppose instead of 1700 points, I book 1400 point or 1300 point. That is fair for me with 50% quantity. Is it clear to everybody? Yes, this is about selling short, Anketji. Correct. So similarly would be a triple top. I will see that if I have a triple top here. Triple bottom also I have. A similar thing. See what happened after a down move, and this was a big enough down move. From a level of 900, close to 900, it came to 500. First a bottom, then an up move, then a bottom, then a down move, then a bottom. So when there will be a triple bottom, fortunately here the pullback points were same. There can be a situation when pullback points are different. You understand, because here first down move, then a pullback point, then down move, then a pullback point. Here top of this pullback points were equal. There can be a situation when this pullback points may not be equal. You understand what I'm trying to make? So in that scenario, the highest of these two, you will draw a line through that. And the moment there is a breakout, you will consider the difference between two lines and project it outside to find a target. And obviously, you will enter with a concept like 3% stop loss. It goes up. You book 50% and wait. And then if you can hold this because it actually breached, you are out once again. Then it started staying above the line. You can enter that point of time and hold the move for longer duration. There was a point. Ramkrishna Nibhanu Puriji. Is double bottom formed in daily chart for Maruti currently? Currently Maruti in daily chart you are saying. Okay, let me see. Auto, given the kind of movement in COVID, no, there is no double bottom, sir. There is no double bottom. It is yet a down move. You can see it is yet a down move that is happening in the daily chart. We will buy only above 7300. So let me mark it. Crossing above 7300, we will buy. If not before that. It is right now in a downtrend. And this is a very strong support line, you can say. So below 6700, one can sell also. So sell below 6700. On weekdays, I have almost 400 alerts. So last week's alerts, you can see, if you have seen, I have shared this charts with you. So these were alerts of my last week. So on a weekday, I will have when the week will start, because I have not done my weekend analysis. So that's why you are seeing it like this. So on a particular week, I will have this kind of and sale. I have told all of you that keep an eye on the sale, because sale looks to me quite a bullish stock right now. There has been a breakout in sale. So we will learn about cup and handle pattern. So here we will learn about the sale right now. Though it is not exactly cup and handle, but we will learn about it. Okay. So I've marked on sale also. Anyways, the triple bottom is clear to each one of you. Triple bottom pattern is clear to all of you. This was the triple bottom. So similarly, we will learn about triple top right now. So similar thing, after an up move, three tops have similar level. Now, our target is the depth of the top. The moment there is a breakdown out of this, we can go short with a depth as. So how do I project the depth? Dwarikesh Sugar, okay, in the daily chart. Okay, in 2017. Let me show you. Dwarikesh Sugar. Sugar. Yeah, na? So this was the thing. So breaks down, here it see, if you had sorted at 72, by 71 it did not have your stop loss, and it went to hit your stop loss also. Not an issue. This may happen that when you short something, it goes up and hit your stop loss. But what I generally do is that when there would be again the breakdown happening, I will again enter because once my stop loss is set, I will again try to enter this stock, and then it will fall. Vasabraji, I think I told it twice in this class. So please pay a little bit attention, Vasabraji. Anything that is more than an hourly chart is good for the classical chart pattern formation. So this is the third time I am repeating. Any chart pattern should be looked at hourly and above time frame, please. So below that time frame, we don't look at 15 minute or 5 minute. Okay, thank you. So triple top and triple bottom both are clear to all of you, correct? May I consider that these patterns have been clear to all of you? May I get a show of hands? Triple bottom cannot be formed on top. Sir, how can bottom be formed on the top? Because before formation of a bottom, there has to be an up move. So how can triple bottom be formed at top, sir? Vigeshji. Sukhbir Voraji is asking, sir, should they be forming at top or bottom only or anywhere on the chart? No, sir. If you see a formation after this, you don't know if it is going to break down. If after an up move this has formed, it could have broken on the upside also. Then it would be called a flat pattern, that I will come to later. But if after forming a pattern like this, it falls down, it is a triple top only, sir. Think logically a little bit. Right? If it had broken on the upside, then it could have been a different pattern. But if after a down move, I think the down move example is also there. After a down move, it is moving up, then it is a triple bottom only, sir, right? So here, Om Prakash Dwivedi is the channel we could see multiple tops and bottom. No, sir, there is a difference. See, there are only 3 tops only, and bottom you can see there's bottoms. Like I told last time, bottoms can be at different. First pullback was at higher level, second pullback was at lower level. What I told in the very beginning, that if there is a fall, we will take the bottom which is lower. So here the lower bottom I had drawn the train line. Is it right? Here in this case, after hitting this top, it had come down. It is this top, it has come down. It is this top, come down. You can say that there was 4 times movement there. But if I take this part as one, it looks like a triple top. Basically a consolidation. Every pattern that we will learn is a consolidation. And how to trade a consolidation? Simple. The direction it breaks out, you take the trade. If it has broken down, you take the trade. If it could have broken on the upside, you would have taken the trade. Correct? Clear, all of you? Okay. So let me go to the next pattern right now. This is the most highly talked about pattern. And when I was learning this pattern, when I was young actually, so what happened is that the first pattern I came to know is head and shoulder pattern. So I remember that this was a pattern that fascinated me quite a bit. So just a second for our benefit. Let me put those charts which we have already completed in this box. Okay. So, just a second. Just a second. Now, I will first learn about this head and shoulder pattern. Forget this part, okay? These three lines, just forget. Look at this pattern. How does it form? And this was State Bank of India weekly chart. Let me go to the chart itself. It will be better, okay? Instead of going there. Weekly chart, State Bank of India. I will go back a little bit. So this was the pattern, okay? Understand how I draw it, because this drawing is very important. And after understanding the head and shoulder pattern, we will take a brief break of 5 minutes and then again start, okay? As we do, we take two small breaks, water breaks maybe, so that our flow is also fine and our understanding is also balanced. Now first I can take from here, anywhere. When I look at a head and shoulder pattern, I just know that there is a head and shoulder pattern. Now I have to draw it. First line I can start from a lower level anywhere, where I go at the first stop, okay? Then I come down to the lowest point in this region, which is the lowest. This seems to be the lowest, okay? Then I go back and mark the top. And then I come back to the lowest level, okay? Lowest level. The way it has been formed. Now, this is the top. This is the pattern. So the choice of first point doesn't make any difference, because the horizontal line is drawn through the two bottoms and three tops are marked here. Very clearly a head and shoulder pattern. Why? A shoulder, a head, a shoulder. Generally what happens is that when there is a breakdown below this, we take a short trade, and our target, how I decide, is from top to bottom we draw this. Top to the neck bottom, okay? So from top to the neck bottom I draw this. Then I copy this. Control C, Control V. Once I copy this, from the breakdown point, I project it downwards. This is now generally in the market, how do we trade it is that we take 3% stop loss from the breakdown point. If it goes up, what will happen is that if at the breakdown I shorted, if it goes up, I exit at the short. Ideally, classically, it is said that hold the first nearest shoulder as the top, as the stop loss. So if you have shorted at 266, stop is 303. But please understand, in practical world, it is very difficult to have a 10% stop loss. Generally, in derivatives, you won't trade like that. So if you are plotted here, your stop is taken, you are out. Then how to trade it? See, this is a consolidation zone. Again, you know, this was a head and shoulder. This has taken your stop loss here going up. Now, you know that this is a consolidation zone, and take this point also. Consolidation zone, that was happening. And you know, from the head and shoulder, the target is this much deep. What you can do, the moment this swing low is broken, you can take a trade with a stop loss around this line, because this was a earlier breakdown point, and you can see the kind of fall it had taken. Now, just understand this. I am going into many head and shoulders which had happened recently later. Understand one thing, just a second. Understand one thing. When this line, this is called the neckline, this is called the left shoulder, head, right shoulder. When this line is upward sloping, it is less bearish. When this line is horizontal, if we have a head and shoulder like this, if it is horizontal, then it is moderately bearish. And if we are having a like this, we have to go down, and the neckline is declining the most. If we have like that, then it is the most bearish scenario. So based on the neckline, you have your movement. Okay, you have your probability of the movement. This is the head and shoulder. Let me show you an inverse head and shoulder. It's a similar thing. This was Tech Mahindra daily chart. Okay. In this, what happened? First a down move. So you can start from here. Then a down move. You click, and then you mark this up move. Then down move. Then you select these two. So when you select these 2 points, this point gets automatically selected. This point gets automatically selected, because you are selecting the 2 tops, and this right shoulder, left shoulder, you selecting. You remember when we had drawn it, I am redrawing it, you will understand. How I draw it, look at this. In this, there is a head and shoulder thing. I start from much below, but I select the left shoulder, I select the head, this pullback, then I select the head. Sorry, I did not select the head. I have to select the head. Why it is not getting selected? Okay, this is head. Now I am selected this bottom, and now I am selecting this top, and now I am selecting. So the moment I select these 2 points, this point gets automatically selected. I am selecting this point, this point, this point, this point, this point. I am selecting only 5 points, and I am starting from this, and this is automatically selected. Even if I increase till this, it doesn't matter. So these 2 points are not getting selected. My breakdown point is when it is breaking below the neckline. So I am selecting only this point, this point, this point, this point, this point. Left shoulder, head, right shoulder, pull back point. All of you practice head and shoulder like this. Okay. There is a question I will take from Ankit. Sir, what I see is when we are entering into the trade for selling short, it has a finish by the end of the trading day, but the target or stop loss sitting is multiple days or weeks. That's why you have to sell in derivatives. In cash market, it gets, you have to cover within a day, Ankit. But if you if you sell in derivative, you can hold your short for multiple days or weeks. So here is the answer to your question. Now I have another inverse head and shoulder in crude oil. Okay. Similar. And this was daily chart. Fall, pull back, fall. Now in a head and shoulder, you always see the head more down, inverse head and shoulder, the head more down than left shoulder or right shoulder. In this example also, head was higher. So head will be more deeper from the line compared to the shoulders themselves. This is one important point. So in the crude case, you see head is more deep. Now how do you draw the target? You measure with the help of the arrow the depth of this point from the neckline and project from the breakout point. Now either left shoulder can be high, either right shoulder can be high. That is not an issue. Now what we learned in the case of an head and shoulder, let me revisit. If the line is slanting upwards, it is least bearish, most bearish when lining slanting downwards. In the case of inverse head and shoulder, it is just opposite of that. That is, when I am talking about inverse head and shoulder, if the neckline is upward sloping, because we have to go upward, it is most bullish. Because we had to go down, the head and shoulder, it was less bearish, but it is most bullish. Middle one, moderate. Like here it is in the least bullish category because it is slanting downwards. But had it been like this, so our confidence in this kind of a pattern when the neckline is like this would have been much more bullish. There is a question I will address to that and then I will move. So could Ramkrishna Nupodiji is asking, could you confirm that Maruti daily chart is head and shoulders formed December to February? Yes, it has formed. I remember it was formed in Maruti. Mostly I remember that it was formed. Let me see. December to January. December to January, if I go to daily chart, I think it was formed, if I remember correctly. It was formed, sir. It was very well formed, if I remember correctly. And I gave this trade in my TMP to my TMP students. This one, pull back. This one, pull back. This one, pull back. So it is in a downtrend and potential target I gave one was 6100. I remember properly. So let me see if it is coming to 6100 again. So this is the line, approx 6100 I said. Control C, Control V. Now I am projecting it from downwards from the breakout point. So around 6000 it is coming. So 6100, 6000 I gave the target. What it had done, it has once fallen, then had pulled back, then had started falling, and possibly it can until and unless there is a breakout above this, it can go towards this 6000 level. There is a high possibility. Okay. Now there was another point made by someone else. Rajesh Goel, it is very difficult to look all the stock charts to find out the chart pattern. There must be some software program. No, for classical chart patterns, there is no software program, sir. There is no software program to spot classical chart patterns. I watch almost 250 charts every day, and that takes me maximum 2 hours. You start with 20 stocks and give 10 stocks, give them 1 hour, Rajesh Goyalji. Over a period, your speed will increase and it won't take you 20-30 seconds, more than 20-30 seconds to analyze a chart over a period of time. You first start with 10 stocks. I have given 10 stocks in the last class, if you remember. So, head and shoulder and inverse head and shoulder is clear to all of you. I am getting yes. Yes. Okay, so let us have a 5 minutes break. Great, thank you. So we will join at 2:10 again. Okay, thank you. In the meantime, let me select these charts and put them in the. Hello. Yes, sir. Please mute yourself. You please put your questions. If you have any question, please put yourself. Put your question in the chat box. Please don't speak because that will actually create a little bit of disturbance in the class. Because that's why we request everybody to please put your question in the chat box. I will answer your question definitely.
Asking, sir, but just I think you missed that's why I called.
What?
Just now I asking the just now I asked the question I writing, but I think you miss.
What question, sir? What is your question?
I asking.
What is your name, sir? Good name,
I'm
sir?
Pramod Kumar, sir.
Okay, I'm watching the question, trying to watch the question, Pramod Kumar. There is no question of Pramod Kumar ji, sir. You see in the chat box, there is no question. Please put your question in the chat box and please keep your much back. Tata Power now forming a double bottom that you have asked at 142. Okay, let me see Tata Power. No, sir, it is not that kind of a double bottom. This is a flat pattern basically. I won't say this is a double bottom because this is very small fall. This is more of a double flat pattern that we are going to learn a little bit later. Thank you, sir. Sir, please let us join in maybe at 2:15. Right now is 2:09. So thank you. Thank you. Please, all of you, put your question here, and if I missed, please repost the question. Otherwise, it will be difficult to hear for all of you. Okay. Thank you. Aniket is asking is Bharti Airtel is forming a triple top. Sir, see, there are a lot of patterns in lot of charts. What we will do is that if we have stock observation, you can share me after the class in the group and I can confirm. That will be better, and towards the end of the class, once we study all the patterns, it will be better for us to try and identify individual patterns in charts. Okay, right now let us focus on the remaining of the patterns and go ahead with the patterns. For any the chart patterns, we can confirm towards the end of the session, or after the session also you can post in the group and I can respond. Thank you. Now we will learn about the falling wedge pattern. Okay, so look at this Axis Bank falling wedge pattern. This I will get back to later. Don't look at the pinion pattern right now. Okay, the falling wedge is, see, in a wedge, narrow wedge, it is a wedge like pattern. Okay, this is the thing. So we will learn pinion pattern which will look like a flag. This is pinion, this is pinion, which will look like a flag, but falling wedge pattern is something which is very narrow and long to shrinking boundaries. Okay, the moment there is a breakout, if you see a price moving up, here we can see daily chart. The target is uh, you can create from the second touch point. So or you can create from this one also. So this distance you measure in the downward upward direction. This you can project from this point. You can see the target of the wedge. Let us look at a wedge pattern if it is available. So in this chart, I will try to find a wedge pattern in any of the stocks. So maybe in Hindalco, let me look at if I can find a wedge kind of a pattern. So this you can term as a falling wedge. Okay, can we let me look at this?